Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading view with over 190k reputation points. In this video, I'll speak about gold. And as usual, to keep the video as educational as possible, first I'll cover the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, which is what the big players in the market are doing and how they're moving and shifting their orders, which you see right here. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight into it. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is in a very strong uptrend. The market has been creating a series of monthly higher highs and higher lows, and all this push to the upside, and this uptrend is fueled by very strong institutional buying. And we will be speaking about institutional positioning and how institutions are moving and shifting their orders in just a few minutes when we move to the commitment of traders analysis. But for now, let's keep in mind that the market is in a strong uptrend. The last leg to the upside was an impulse. And as we know, after an impulse, usually the market follows with a correction before then continuing higher. So essentially, when the market is in an uptrend, you expect the market to continue to create, in this case, monthly higher highs and higher lows. That is the basic market structure of an uptrend, a series of impulses and corrections and higher highs and higher lows. So far, the market has been behaving exactly in that way. The last move, as we just said, was an impulse. The next logical step would be to see first a correction and then the continuation to the upside. So for the market to create first a higher low and then a new higher high. So the monthly is very bullish. What we can also notice is that we just had a major break of structure. This level here has been acting and was acting as very strong historical resistance across multiple years. Starting here from 2020, already was acting as resistance. Then the market managed to break above that zone. And as we know, previous resistance, once it is broken to the upside, becomes support. So we had the retest, the market respected it as support, and all this huge uptrend started developing away from this zone. And at the moment, we still are in this uptrend. Dropping down on the weekly time frame, what we can see is that also here on the weekly, the market is in a strong uptrend. We can notice the creation of this weekly higher highs and higher lows. The last move was the creation of a new higher low. So we had a higher low here, higher than the previous one, which obviously was higher than the previous one, which was higher than the previous one. So clearly the market is still in an uptrend. Now, the next logical step after a higher low is for the market to create yet another higher high. So the next step would be for the market to potentially create a new weekly higher high. Dropping down on the daily time frame, what do we see? Now here on the daily, we just noticed a major break of structure. But before we update the structure, we have to keep in mind that first of all, I spoke about gold just a few days ago. First, when the market was here, I explained all the reasons for which I was expecting this push to the upside. Again, here, I made a full breakdown explaining all the reasons for which I was expecting this rejection. And by the way, I will link in the description both these previous analysis so you can go and check them out for more free education. But I also spoke about a very important structure level in my very last analysis, which was this one here. And I explained how if the market would manage to break above the zone at that point, the structure from a daily perspective would again be bullish. And that is exactly what the market did. The market broke above this previous high, which was acting as previous resistance here and here. Now that the market has broken above this zone, this means that this previous resistance level is now turned support here. So if the market will now go and retest this previous resistance turn support, we have a very good probability of seeing institutional buying inside of this level. Speaking about institutional buying, if we go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing, and we look at the data for gold, the first thing that we have to keep in mind is that if we're looking at the data for gold, gold, we're already looking at gold against the USD because all currencies and commodities are traded on the spot against the USD. So institutions with the last reports have been increasing their net positions from 161.2K all the way back up to 187K. So institutions are again shifting back to the bullish side of gold, increasing their longs from 234K to 245K and decreasing their shorts from 76K down to 58K. So institutions currently are holding a staggering 245,000 longs compared to only 58,000 shorts. So they are aggressively positioned to the bullish side for gold. So it comes as no surprise that the market has been in such a strong uptrend in all this period. So let's keep all of this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find again linked in the description, so you never miss new updates. Now back to the analysis. So from a daily perspective, the market is currently approaching previous daily resistance turn support. We also have to keep in mind that after an impulse, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg. This shows us how we have the 0.32, 50% and 0.618 Fibonacci retracements lining up exactly with this previous resistance now turn support here. Now this creates confluence of support inside of this level because we have the 3 Fibonacci levels and the previous horizontal resistance now turn support all lining up in the same area of price, therefore creating confluence of support inside of this level. And when there is a confluence of support zone, there is an increased probability of seeing institutional buying inside of the level, further increasing the probabilities of a potential push higher away from the zone. So if the market will correct inside of this area, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, I wouldn't be surprised to see a potential rejection to the upside away from this level for the market to complete this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me.
Now, if you want to learn more, I really recommend that you go and check out my website, which is linked in the description, because what you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you head over to the website in the description, you will have the possibility to join the best trading program on the planet. You will gain access to all the courses ranging from the very basics of charting all the way to the more advanced topics like building automated trading strategies using the MQL4 programming language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer, and much more. You will have the possibility, in fact, to gain access to the trading station software with the Telegram notifications integration, one-on-one private mentoring directly with me, the COT data software, which often you see me use directly in my YouTube videos, on all my platforms actually. And if you scroll down, you will see that you also have the possibility to get the integration. So all my EAs, which you find here presented one by one directly on the website. And you also have the possibility to gain access to my live trading show. So I live stream of all the trades on my live account as they're opened, closed, trade, and obviously managed. And if you continue to scroll down, you will see that you have the possibility to join just after here the testimonials and gain automatically access with the email and password that you will create during the checkout process. So I really suggest that at least you go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure to click on the like button. Also, let me know in the comments below any new pairs that you would like me to cover in my next videos. Also, any questions you have, leave them in the comments below. Subscribe to the channel so you never miss new updates, and I will see you in my next video.